everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Kalu Aja is joining me right now with a bit of context, clarity, and most importantly, honesty, which this show is known for. So Kalu Aja, good morning and welcome to the program. Are you there?
See you or hear you. Yeah, welcome.
Hi Kalu, good to see you. How are you doing? Good morning.
Good morning. Thanks for having me.
Yes. Let's start with the S&P upgrade for Nigeria from stable to positive. What does this outlook really mean for us? How would you really interpret it for someone watching now that does not understand the technicality of what we're saying? That's one. Then number two, do you think it's a function of fundamentals merely improving as we've been told, or that our policy choices have been good so far, but we're still living within a fragile economy? You understand what I mean? Yes,
Yeah.
go ahead.
Well, so S&P essentially took us from stable to positive, which means that they see that the outlook, remember the word is outlook, tomorrow is better than today. That was S&P saying. Why is tomorrow better? They are saying, number one, we've increased our oil output, or we've reduced the theft. That's number one. Number two, we've depreciated the Naira. We've moved the Naira peg, which means imports have fallen, or the cost of imports have fallen. And because we don't have more revenues, we're able to pay down our foreign debt. That's the story S&P is saying. So based on this fundamental, they are saying the future for Nigeria looks better. But S&P does have a caveat. They say, listen, GDP per capita is very, very weak, about $1,200. Poverty is still very, very high. They also put that in there. So essentially what they're setting us up to say, listen, if things go as planned, together with the tax revenues that are going to come in when we pass the new 2026 tax reform, this is going to make Nigeria's growth go up. And because it's going to go up, the fiscal framework is going to look better, so the outlook is good. But they also say, because we have built these reforms on the back of depreciation of the Naira and poverty remains high, then the average Nigerian is going to be maybe at odds end with the numbers we are posting, but they are seeing their own budgets fall. The response to that, my own response, remember, Nancy, what we have simply done in 2 years is to go back to the growth-focused economy Nigeria had from 1999 till 2014. So I think we're overplaying this too much. We had a break in that growth-oriented capitalist economy when we had President Buhari coming for 8 years. He put a stop to that. He paid a lot of fuel subsidy payments. He pegged the Naira. That took us back. So what President Tinubu has done is to remove those pegs, allow the economy to go back to its capitalist footing. And that's where you've seen this growth on. So we've done that macroeconomic hard lifting. What remains now is growth, consumption of Nigerians. The economy now has turned the corner, but we've got to create growth. We've got to go back to consumption so the average Nigerian can then see the future in this new positive outlook at S&P.
Carlo, how do we go back to growth? Okay, how do we get growth in? And how do Nigerians now begin to consume? A Nigeria that we are seeing Nigerians having lower purchasing power as it is, because with the intentions, not just even intentions, with the policy executions of government in the last 2 years, that have really shaved off a lot of Nairas, let me put it that way, from our pocket. Nigerians are more squeezed. A lot of Nigerians are out of jobs. Companies are, are facing tough times. Naira has stabilized, but we're seeing Naira within the threshold of 1,400 and something Naira now to the dollar because of what has happened in the last few days. Even companies have gone out aggressively. We're seeing shrinkflation now that we've seen, at least in the last few years, even skimpflation and shrinkflation, many Nigerians not having that wherewithal to be able to, go ahead with their daily lives. So where will the growth come from, and how will consumption, how can we get back consumption when Nigerians, are all in this, apart from perhaps the less than 1% people that can afford all they can?
Well, S&P did say that only 10% of Nigerians are in a formal wage employment. So that's a number to keep aside. But where is the where is the economy? Where is the growth in the economy? It's in three sectors: agriculture, trade, and IT. These three sectors have come under severe pressure. Look at agriculture. It's the number one employer in Nigeria, number one wealth generator in Nigeria. But look at the insurgency, the banditry, the terrorism has reduced the flow of agriculture in Nigeria. So once agriculture is down, inflation went up, and then you see that poverty go up. The growth in Nigeria has come from the oil sector. We might say that is good, but the whole idea for Nigeria has been to diversify away from the oil sector. But we're growing much, much more in that oil sector. So kudos, but it's also a red flag that we're just going back to making the bulk of our revenues and our GDP to come from fossil fuels and all that. So if the West says no more fossil fuels, we're in trouble. So the growth has got to go back to the traditional ways that we grew the economy. Agriculture, not in the farming per se, but the post-production, post-harvest processing, where we can take corn and orange and make it into orange juice and flour. We need to get our value chains working. Same with trade. There's no trade going up because interest rates are just too high. So no one is trading. So you can see very, very anemic growth in trade. IT is doing well. We've increased the tariffs that IT folks can charge. So there's a bit of a revival there. But that's not been enough to counter what we've fallen on agriculture and trade. It has to come back to that job creation, Nancy. If there is no stimulus, the private sector now is suffering from lack of power, lack of and insecurity. The government has got to go in and stimulate consumption by doing infrastructure projects that create jobs for the young people so they can take those jobs and then buy stuff. Not the 5,000, 7,000 jobs you pay people. You've got to really pay people lots of money. Pump the economy, helicopter money, so people can take that money and go and buy
Where will
stuff.
the government get the helicopter money, Kalu?
The same way they get the money.
The helicopter money in the last administration
jets
was printed, which put Emefiele in trouble and all of that.
The exact same thing.
So they should print money for helicopter money?
And go and build railways and housing. You stimulate the economy.
But you're also causing inflation.
Deficit financing.
We tried that in the last administration, Kalu.
We
helicopter,
didn't.
yes,
We
helicopter
printed
money shared to people even during COVID and all of that. CBN was printing money and advancing to the government.
CBN was printing money and using to keep fuel subsidy costs low. We wasted the money on fuel subsidy consumption.
Apart from that, some of the monies also went to people, went to individuals in the country. The palliatives and co.
22 trillion. And the budget for fuel subsidy was more than health and education combined. We can print money and build homes and railways, and the economy will be stimulated. If you don't do that way, there is no productivity because you have no infrastructure. It costs more to move rice from Kebbi to Lagos than from China to Lagos. If you don't fix that, the economy cannot grow.
So are you saying we should print money to solve our own problems, but where do we now plug in that deficit? Because if you're printing money, the government has to account for it somehow. You understand what I'm saying?
Nancy,
just like it did the last time, securitizing it now. So how will it do that? Are you saying we should print money and don't borrow, but let's print? Having in mind that we are not like the US.
When we say print, we mean that you're going to take in excess of your budget, deficit financing. You can print, you can borrow, but you cannot rely on revenues alone, organic revenues alone, to grow the economy. There's a huge infrastructure deficit that can only be plugged by borrowing, by printing, by bringing FDI and FPI to grow the economy. You cannot grow the Nigerian economy with a 7 trillion naira budget. It's not going to work. The gap is simply too much. You've got to focus on creating infrastructure by employing young people and paying them so they can start to consume, and then you revive the SMEs in Nigeria. There's just no other way you can do it apart from going this method. That's the
Okay.
Marshall Plan Nigeria needs to adopt to grow the economy, create jobs, and create consumption. That's it.
Oh, this interesting conversation that I'm having with Kalu Aja. I hope that I don't fall out with Kalu Aja today because of some of what you're saying. So you'll get to see us again. All right, Kalu, like I said, I hope we don't fall out. It's just that you are virtual. We would have perhaps we exchange blows this morning because because this thing about printing money and all of that, I understand that and I know where it also stands in economics. But I also do know that a few countries have done it, and we've tried to do that in the past, which have plunged us into a bit of the debt that we're seeing today. Now, since you're talking about printing and borrowing, you're saying that the 50-something trillion naira that we have as our budget will not be enough. So either we'll budget, either we'll borrow, or we'll print money. So that's where you stand, isn't it? Good. Now, if
You've got to either do FDI, FPI, print, or borrow. You've got
but,
to get capital into the economy.
but we're getting FPIs already. We're getting FPIs already.
No,
we are not getting
we are
enough
doing
FDIs.
FDI is very anemic, Nancy. Nothing is coming in through FDI.
Yes,
Less than
FDIs.
$1 billion.
Yes.
Money is coming from FPIs.
That's what I'm saying.
portfolio
FPIs, monies are
That's
coming in,
correct.
but we also know, both of us know that it's hot money, as it were.
Correct.
Yes.
Which is why I go back to the point I'm making. You've got to get external funds into the country for long-term projects. We have the diaspora outside Nigeria. They are out there. They want to invest. They need a framework that is guaranteed to then invest those funds into Nigeria. We're not tapped the diaspora yet. We've got to go. There's nothing wrong in borrowing, Nancy. It's the cost and the purpose that's the problem. If you borrow to import PMS, that's a waste of the borrowing. If you borrow today to build 10-lane highways all across Nigerian states, it's a stimulus to the economy. You will get that money back from the growth that the taxes would bring in. There's nothing wrong in that. We've got to borrow, build infrastructure, and that infrastructure will pay itself back by tax revenues. That's growth. If you don't do that, the younger folks cannot get a job. There is no power. If you want to do skates or you want to do IT, you need power, and there is no power. You have to pay 4 trillion to the power sector guys. Where did we get that money from? We had to borrow it. So I'm just saying, do it for better this time and target it to more infrastructure.
Okay, Carlo, our borrowings now that are around, I think, 152 trillion naira, is this sustainable? You know why I'm asking you this question? I moderated a webinar on Saturday, the Capital Markets Academics of Nigeria, of course, all the capital market professors and the who's and who's of this economy are on that platform. So I had the pleasure of moderating that webinar on Saturday. And this issue of debt was what we discussed, the issue of debt sustainability. The presidential advisor on economy was on that platform. We debated. In fact, I and Dr. Tokbe Fashua, we had a very serious round on Saturday, even at another platform around the issues of this economy. The way our debt is right now, do you think is sustainable? Because from what you're saying, we are not borrowing enough. But I also do know that you said it on this platform many times on this my program, that Nigeria has a spending problem. So is Nigeria's debt sustainable as it is right now? And are we borrowing for the right reasons, even if you say that we need to borrow more for growth? Where we are right now, you satisfied with what you're seeing?
I mean, where we're borrowing from, the problem is the Euro bonds. That's the expensive portion of the debt, foreign debt. The loans from the World Bank, the loans from the multinational agencies are not that expensive if you compare to the potential returns that you get when you invest it in Nigeria. So the Euro bond, maybe cut that out because it's a bit at 9% in US dollar terms. I would go to Euro bonds. I would do more of diaspora bonds. I would do more of multinational bonds. I would do more of long-term Nigerian debt. Foreign debt, local debt here in Nigeria to raise Naira revenues that you can then deploy to infrastructure. The PFAs are there. We have lots of latent capital in Nigeria. Nancy, there's no argument about if we should borrow. There is no other way you're going to get these funds from. The problem is not the borrowing, it's what we've used the past borrowings for. We built Kanji Dam. That was our first borrowing in Nigeria, Kanji Dam. If we waited for revenues, we wouldn't have built Kanji Dam. But now we're borrowing to pay salaries, to buy private jets, and to refinance the debt. We've got to cut that out and go back to revenue bonds. Borrow for revenue generating activities, grow the economy. Stop the euro bonds. Try diaspora bonds, which are more impactful and more cheaper, and go to more of multinational debt. Sell assets. NNPC is right there. Reduce the JV stake, raise capital, use that capital as a seed fund to get in more long-term capital into Nigeria. I don't see how else you do it if you don't basically get external funding into Nigeria.
With the way that we've gone with our borrowing, perhaps except for the Sukuk, let me say for the Sukuk, for example, the Sukuk funds, because I've driven around roads, at least here in Abuja, and I see that those roads were financed by Sukuk. Apart from those kind of funds, are you satisfied? Because you didn't answer my question earlier. Are you satisfied with the way we utilize the borrowings we have? The president is seeking approval for different tranches of different borrowings from the National Assembly. Are you satisfied with the way we are going about borrowing right now in terms of the utilization of it? And you're encouraging the administration to borrow more, yet what infrastructure, what tangible infrastructure are we seeing those borrowings for? Have it in mind. There was a time I even did the calculations that each of us owing over 500,000 naira, it must have even gone higher now in terms of borrowing per capita, now in terms of the debt per capita. Because we will pay these things back.
Yes. And Nancy, I did answer your question. I said that in the past we used borrowings to build the Kainji Dam, but now we're buying private jets and paying salaries. Of course, the utilization is the problem. That's why we're having this back and forth. The utilization remains a problem. And I said, go back to revenue bonds, which means like the Sukuks are revenue bonds. It's tied to a project that can pay back. If you borrow today to build a coastal railway that goes from Lagos, connecting all the state capitals, the oil refineries, the ports, the food baskets in the Middle Belt, that's not going to be a waste of funds. You're going to pay that back by the growth that's going to be generated from that railway. But we're not doing that. We're not borrowing to do railways. We're borrowing to repay salaries, refinance loans, and then we take a little bit and we do capital infrastructure. That's my point. It's not the borrowing. It's what we have been doing with the past borrowings. We've got to go back to revenue bonds, Nancy. That's the point I'm making. You can't grow an economy of Nigeria's size. Remember, we got to if you look at the last report we read, we got to nearly 900 billion. That's the size of our economy. You can't grow a $900 billion economy on a 37 or 40 trillion naira budget. It's not going to work. It's just not going to work.
Okay. Kalu, let's go back to the issue around S&P upgrade for Nigeria. The Minister of Finance and Coordinator of the Economy, Wale Edun, has welcomed that development. Layemi Cardoso, the Governor of the Central Bank, has also welcomed that development. Do you think they should go to the party yet with their drums?
No, of course not. Like I said, it's an outlook based on certain things happening. Number one, the fall in oil theft has to stay low. Number two, oil output has got to go up. The target for Nigeria in this year's budget, 2025, is about 2.01. OPEC's target is 1.5. The last report I saw from the Nigeria regulator, we're doing 1.4. So we're not even on OPEC's number, talk of the budget's number. We are borrowing based on 2 million barrels a day, but we are producing 1.4 million barrels per day. Big gap. So the outlook can only work if we meet what we have said we'll meet, not what S&P is saying, what we said we will meet. S&P said the poverty levels are still very, very high. GDP per capita is still very, very low. If we grow the economy by the macro numbers and the people of Nigeria remain poor, then we've done nothing. We've got to enable the younger folks in Nigeria to enter into the race to become middle class by buying a home, getting a good job, and being able to spend money. If we don't do that, we'll have a GDP economy that is growing at 10%, but nobody can afford to buy Coca-Cola. That's not going to make any sense. So no party, we've simply gone from where we used to be before 2014, we've gone back now to 2014. So start now and grow the economy. Consumption, growth, infrastructure. That's what we need to do right now.
Let's dial a bit back to the 15% temporal suspension of the petrol tax. What do you have to say about this? You know, where do you stand on it?
I think it's a red herring, sorry, Nancy, because the question we want to ask ourselves is why are we in the first place importing PMS? That PMS is from borrowed money. It's in dollars. Why are we in the first place importing PMS when we have a refinery in Nigeria that can take all our local PMS? Is it cheaper to import? Yes, but we are exporting those jobs when we import PMS. So giving 15% to me looks like a way of, quote unquote, approving the import of PMS. It shouldn't happen. Strategically, once the Dangote refinery has come on stream, we should stop imports of PMS. End of story. Let's now talk about the imports of crude oil to Dangote. That's a different matter. But the whole thing looks like a bit of bait and switch. We're going to tax the importers 15%, then we're not going to tax the 15%. But the real question is, why are you importing PMS? It's like saying you want to tax pure water imports.
Kalu,
why are you importing
how
pure
about
water?
this school of thought that can a country, as it were, hinge its demand on one refinery for now? Do you understand what I'm saying? Even the U.S. produces, the U.S. is the largest producer of crude oil. It still imports. Correct. It still imports daily. It still buys oil from people daily, you know, from countries daily. Correct. Yes, and it imports. So how much economic sense does it make? So if something happens, for example, to Dangote refinery, that means that the whole country is also, while there's also that push, because for me, I also feel, apart from Dangote refinery, other refineries should also be encouraged, as it were. There are some other refineries coming on board, you know, to come on board very quickly so that there would be that elasticity of, you know, suppliers. So what do you have to say about that?
So let's talk about, so in the S&P report, Nancy, they mentioned Dangote refinery. If we did not have a Dangote refinery today, the Naira would be near 2,500. Our import bill would have gone up. There will be no positive S&P report. You go to war with the army you have. We now have a refinery in Nigeria. It's here, it's working, it's one of the largest in the world. That's the reality. BUA is coming up. There are many refineries in Nigeria today, not at the capacity of Dangote, but they are coming. But we have Dangote, and every barrel of oil that Dangote, Nigerian oil, that Dangote can refine is jobs in Nigeria, is wealth retained in Nigeria, is tax revenues for Nigeria. So we should be talking about how can we increase Dangote's refining of Nigerian crude to produce Nigerian PMS and not 15% at all. If Dangote is not working, the economy is going to crash. The refinery, the economy literally will crash because we're going to go back to importing PMS with billions of dollars. And we're going to go back to where we were in the past, where we have a fixed Naira return because we have to import PMS more than health, more than education combined. Okay. So now we have this gift that has taken years, and Nigeria invested in the refinery. We invested in it, so let's reap from it. If there's no refinery tomorrow, then we say, yes, there's no refinery. How can we keep costs low? But there's a refinery today. So let's reap from the investment Nigeria has made by saying we're not going to spend scarce forex on importing PMS. I'm sorry, if this refinery wasn't built in one day, if you sat down and allowed the refinery to get built, then why are you still importing PMS? It doesn't make any economic sense to import a liter of PMS into Nigeria anymore.
Let's take a look at the October inflation print. Perhaps, what do you expect from? We're expecting it later today. I'm sure that when I repeat this program, perhaps the NBS would have released the result. But what do you expect? Because the October inflation print, we're expecting it. What metrics should economic actors be watching beyond the headline number, especially regarding core inflation and the FX pass-through cost? And let me also ask this. The MPC will meet soon, at least in the next few days. Given the Naira's depreciation and the global risk-off sentiment which we've seen, what policy mix do you expect from the MPC moving forward? Remember that at the last meeting, rates were lowered. So what kind of policy mix are you expecting now in terms of even the rates, in terms of communication? The CBN is almost a bit silent on terms of market intervention or market flow, managed flow, but at least the market is a bit open now in terms of price discovery, talking about FX. So do you think that the monetary policy transmission has improved, at least since the CBN's MPC have tightened and now lowered? Are structural bottlenecks still there that would dilute those adjustments that we have seen so far from the MPC, and perhaps we will see in the next few days?
Well, for inflation numbers, I think it's going to be stable or it's going to go lower. Why? Because we're importing a lot of food. Nigeria's inflation is food-driven. So we're importing food, that's reducing the inflation CPI. That's why you see inflation going lower. I don't see it going up anytime soon. But that tells you that it's, quote unquote, if I can use this word, an artificial fall, because it's based on food imports. As long as we keep on importing food, inflation in Nigeria is going to keep on falling. The farmers in Nigeria would also suffer because now they can't compete with the imports, so they are cheaper. So you have to ask the question, do we want cheaper food or do we want economic growth and Nigerian farmers to prosper? That's the policy question the government would have to take into consideration. Let's now go to the CBN and the MPC meeting you're speaking about. I think the CBN has focused on fighting inflation a bit too long. There's got to be some growth in this equation. There is no point having 1% inflation and joblessness. In America, at least the Fed has inflation and employment on its mandate. Nigeria just has inflation. But we cannot have low inflation and high unemployment in Nigeria. It doesn't make any sense. So we've got to bring in the growth talk now back into the CBN. How can they start to support growth in Nigeria? And you won't like this answer, Nancy, but unfortunately, the CBN has got to go back to intervention into the real economy. It's got to start to do targeted intervention.
Cardoso is adverse that, and he said it a couple of times. For what you're even saying in terms of growth, that the CBN has to come back to growth. The primary responsibility of the Central Bank of Nigeria is price stability, which this central bank's leadership, their posture is towards that price stability and not even intervention. Cardoso has said it several times on different fora. He's even told me that on different fora that I anchor or moderate. And Nancy, no, orthodox. So I even call him Mr. Orthodox. So with what you are saying, we are not going to see a central bank that is moving into that anytime soon.
Then we live with the consequences. We're going to have 5% inflation.
Growth, wouldn't that come from the fiscal policy people, from Wale Edu? That should come from Wale Edu. That should come from Madam Jumoke Oduwole.
It has to come from both of them. The fiscal and monetary guys have got to put their heads together and grow the economy. It's still the economy. The Central Bank of Nigeria is still worried about inflation. So if you have low inflation as the only target, that's CBN's rule. I don't begrudge them for that. You've got to still introduce growth into this equation, Nancy. There's just no way. We have, how many youths are there in Nigeria? Maybe 50 million. What's the unemployment rate? They say it's 4%. That's the wrong figure because that's just if you work an hour a week. The real unemployment figure is nearly 40% in Nigeria. How do you employ those people without focus on the intervention into the economy? SMEs can't borrow at 27%. It's not possible. So you've got to bring down that interest rate, which is what the CBN is doing. Bring it down so that the SMEs can borrow. You run the risk of inflation, but you can also then have a good story. It cannot just be that we're targeting inflation in an economy where we have a lot of cash happening, we have the black economy, and we do not have a lot of Nigerian enterprises that are not in the formal workplace. If you keep interest rates at 27%, what's the actual pass-through to the local SMEs in, say, Aba or Kogi State? That's the question we have to ask ourselves. We have to go back to growth. If it's going to be Mr. Waledu that will do it, or Mr. Cardoso, or both, I recommend both. We've got to have a growth conversation to reflate the economy. Nancy, the biggest problem in Nigeria today is lack of consumption. I go back to this point, Nancy. There is no consumption. I'm quoting Nigerian Bureau of Statistics. If the economy does not consume, it cannot grow, irrespective of the inflation rate or the GDP rate. We've got to get people consuming again so that manufacturers can sell, can hire, and the government can make tax revenues. Right now, we're living in a false economy where we are taxing oil and posting GDP and FAC numbers. The real economy is suffering. There is no consumption, no unemployment. We've got to go back to growth, Nancy.
You mentioned the unemployment rates from the NBS. Of course, so many Nigerians are unemployed or even underemployed as it is right now. Do you think that the credibility of the NBS is put at stake now? That's one. And why I'm asking this question is, when the NBS releases the October print for inflation, the September was 18%. In fact, I was in Washington when I got that news around September 18%. I was like, oh, okay. But I also took note of the rebased effect and all of that. But do you think that the NBS credibility is at stake? Bearing in mind that the President Bola Ahmed Tinubu, said something at the beginning of the year. I don't know if I discussed it with you or some other analyst here on the show. In terms of his 15%, the president talked about 15% inflation target for this year. And we are gradually coasting to the end of the year. Do you think that the technocrats within the government or the agency, which is MBS now, and the Ministry of perhaps Joint Budget and Economic Planning, is tending towards the politicians to give President Tinubu a 15% inflation by the end of the year? How credible is that?
Well, that answer is going to, Nancy, is that when inflation simply means the price is no longer going up, correct?
Yes.
So prices are still going to be up,
but at a slower pace.
Has moderated. So if you ask the average Nigerian on the street, if he believes in prices have come down, it's going to tell you no. And I hear what you're saying about 15%. They are importing food. That's a policy decision. So if they hit 15% on food importation, kudos to them. They've achieved that. It's their call. They've used their resources to import food. That's a decision, and they've hit the 50% goal. I don't begrudge them on that. It's the unemployment number that we have to now diagnose. What NBS is doing is taking they put an exam and said the pass mark is 10 over 100. Then they scored 9. Then they said we've passed. We got A1 because the pass mark is 10 out of 100. If you say that people are employed, if they work 1 hour in a week, that's not employment. How can you say you work 1 hour? If I wash a car 1 hour in 7 days,
and I'm paid like 1,500
naira
for washing that car.
Doesn't make any sense.
Would it keep me for the whole week? Absolutely not.
Exactly doesn't make any sense. Then you say you have a 4% employment because of that 1 hour per week. So you are using statistics to give a factual misrepresentation of the reality. And it's the same with inflation. If you import food and there's lower food, prices are cheaper in the market, but what's the macro picture looking like? The farming side, the GDP in Nigeria for agriculture, our largest contributor will stay low because you're bringing the food in. Same with unemployment. So if you look at Nigeria's macro picture, you say unemployment, oh, fantastic. You say GDP, oh, fantastic. But when you go deeper into your numbers, it starts to fall apart. GDP growth has to be more than the population. One thing that we're not talking about, Nancy, is the population growth. We're growing at about 3%. So GDP must start from 3% to be real. If you post 3.4, you've only grown by 0.4.
But we're posting 4.23 now.
So we're going at 1% then. 1% for an economy like Nigeria. You have a house with 4 rooms and you have to give birth to 8 children. Where will the other 4 children stay in? That's why we go back to this argument at the beginning and say, you've got to grow this economy. You've got to open up the economy. There's lots of space in Nigeria, agricultural value chains, but that can happen if you don't have rails, roads, power to go to those rural areas and make those rural areas perform.
Okay.
China has 1 billion people. How did they grow? They grew from the rural areas, then they came back to the cities. They fixed agriculture, fixed infrastructure from
Manufacturing.
the rural areas first. We used to have Diffree. Where is Diffree today? Now we're building coastal roads, but the roads that bring the food are bad. Go to Lagos, Ojota. Look at how plantains enter Lagos. Look at how rice and tomatoes enter Lagos. Go to where they're coming from. The roads are bad. If those roads were good, the cost of local food will fall. You also fight inflation. You can't run away from it, Nancy. You've got to grow the economy, open it all up. If you have no money, print, borrow, sell, but get the money to where it's needed. That's really the topic today.
All right, let's take a look at the issue of this T+2 commencement settlement in the capital market. Are you welcoming that? Of course, if it comes in, 2 plus 2 will be a major shift. Do you also see an operational risk perhaps for brokers, as it were, clearing houses and investors as the market transitions? And we also want to say perhaps our goal should even be T+0.
I think it's good news that we're going to T+2. What that means is that if you sell your stocks on Monday, you get it on Wednesday. So it brings in more confidence to the stock market. You know, the SEC chairman said that night that the stocks were competing with gambling and crypto. I don't gamble, but I think if you do bet on football and you win, they pay you immediately. So gambling has a T+0. If you sell your Bitcoin on the P2P platforms, you get your money instant. So they also have a T0, right? So why should stocks now be T+3 or T+4? If we are competing with gambling and crypto, we should be more efficient. So if you have a stock, you know that, listen, I can get liquidity immediately if I want liquidity. So it's a welcome development. It deepens the market. It brings in more younger people into the market. So it's just a plus news all over the place. So yes, that's a good one.
Is there any risk at all for
there.
Brokers and just like I mentioned, operational risk?
I mean, there's always this is a lower risk, right? I mean, if you can sell in 2 or 3 days, just improve your risk management. Who is selling? Do your KYC, issue checks in name of who is selling the shares to you. It's not that hard to do. Like again, like I say, how does Baba Ijebu do it? If you bet with him, he pays you day one. How is he doing it? So you are a broker. Do it better than Baba Ijebu, and I think you're going to be good.
How do you think that foreign investors are pricing Nigeria today, especially with the news of the past few days, Kalu? I don't think we've not spoken in a while. You know, how do you think that investors are pricing us in? Perhaps is it a market in a reform transition, or perhaps still a high risk environment market? You know.
I think the answer to that is how are our yields, our Eurobond yields, how are they priced? If you look at the Eurobond yield, it's very, very high. You know, we are paying a lot to get $1 into the country. We are also not attracting foreign direct investment. We are doing more of foreign portfolio investments. According to S&P, 20% of that FPI is held by Nigerians abroad. So Nigerians abroad are no longer doing remittance. They are buying bonds. And if anything happens, they take those bonds back. Let me give you this where I'm going to, and this is what S&P also said. If Mr. Trump has said Nigeria is a CPC, country of particular concern, if there is too much noise on this CPC in America, what do you think the Nigerians in America will do? They will sell their bonds and move back to Nigeria, not because they hate Nigeria, but because they are now investing in a country it's going to come under spotlight. You know, I had money in Russia. I bought some Russian mutual funds. When they had the issue, they just froze the whole thing. Till today, I can't get it. Just no more settlement. You can't buy or sell Russian stock. So it's gone. It's just sitting there. It's not lost. It's just I can't do anything with it.
So the same thing improve.
Exactly. So if Nigerians feel that the CPC is going to become an issue, they're going to sell off, go back to dollars in CDs in America. And that's 20% of the FPI. And it's that FPI that is keeping the Naira low. So you see the connection. If Nigerians sell their 20%, dollar goes back to that 1,500. Look at your bond yields. It's also very, very high. So it's what we call, it's an uncertain market, Nancy. Yeah. We have to watch and see where it's going to go to. If things cool down, good. If things get heated up, we're going to start to see the effects on our bond yields, first of all, then on dollar, remittances and of course on the stock market, redemptions by foreigners. We'll start to see there, then it's going to get really pretty bad.
Kalu, in 30 seconds, your Naira analysis as we begin to close the year. Just a few weeks to
I'm worried
the end of
about
the
the
year.
oil. Yeah, I'm worried about the oil output, but the FPI seems to be covering up, like we said. So all things being equal, the Naira should keep on stabilizing on a downward trend if everything happens. But I'm worried about the oil output. I think it should be higher to keep that buffer on the Naira.
All right. Thank you very much, Kalu, for joining us today. Let's talk again soon. Let's see what happens.
Thank you, Nancy.
Thank you.
Anytime.
Thank you. All right, I've been speaking with Kalu Aja, a financial analyst, and we've been looking at the potpourri of different burning economic issues. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.